Robert, thanks a great deal for your attention. Here's what Chimeze is saying now that given the conversation around the agricultural reforms, we have seen what an agro-allied company, Olam, is now doing to take over Dangote Flour, which is here listed on the Nigerian Stock Exchange via its own subsidiary, that is Crown Flour Mills here in the market. How does that actually relate with what we're talking about in terms of agricultural reforms and the value chain?
Well, I think, I mean, that deal is coming a little as a surprise, again, knowing that over the last 5 to 6 years, this is about the second time a company will be taking over the Dangote Flour. There was a takeover by Tiger Brands.
That's just $1.
And DIL, that's Dangote Industries Limited, had to purchase back for a $1 price. And again, the company has been stabilized since 2016, to date, and then this news is coming up. For Olam, it's a great one because they're trying to, further expand into the flour milling space by install capacity and by revenue for the listed companies. Dangote Flour ranks as the second largest. So if Olam is taking this as part of its portfolio, it's really huge. And Olam is doing quite a lot in the Agric space, but again, that's on an industrial scale, and to a very large extent, we don't have so much of that or so many of that happening. Another kettle of fish in the flour milling industry is to the extent to which we are exploring agriculture within that space, because if you look at the raw materials, in fact, the major raw material that is used for the production within that industry is wheat. And wheat is not grown. We don't have weather condition, or should I say, a climatic condition that can support the growing of wheat. So a very large amount of that is still being imported into the country. So it best fits, the Dangote Flour Olam takeover story best fits for what's happening in the agro-allied space, because we still import a large chunk of the raw material that is needed for production.
So to buttress all of those points, all of these your findings and understanding or your perspectives there at AfriInvest, you just concluded a training session with some key operators in the agri business and agriculture sector at large. I mean, what was the outing like?
So what we set out to do was to invite industry experts, across the value chain, from the production to processing to distribution to, even exports, to now look at what are the issues, what are the challenges, where are the financing gaps, and what are the options available, to farmers or any other person playing within that industry. And we did that because of the huge potential that the agricultural sector, has. We don't need to overflog it. As we speak, it contributes about 25% of our real GDP. That is the real GDP of the country, gross domestic product of the country. And not only that, this sector has been growing consistently at an average of about 3.5% over the last 5 years, despite the challenges that the broader economy has been facing.
What's the rebasing of 2013?
Exactly. And when you talk about job creation, job opportunities, the Agric space accounts for over 49% of jobs that are created, in the Nigerian market. And it is noteworthy to say that of all the activities within the Agric space, from crop production to poultry to livestock to fishery, crop production still accounts for about 90%. Although what we set out to do was to look at the broad-based, activities within that sector, which was why we brought a lot of experts within the space. But the point I'm trying to make here is that if crop production accounts for up to 90% of all the activities going on within that sector, and you compare the 84 million hectares of arable land that Nigeria has, and to know that only 50% of that is being explored, and of the 50%, only about 0.3% is irrigated. So what that means is that we often talk about some crops or some fruits going out of season. and that keeps coming here in Nigeria. And it's only in Nigeria that you hear that kind of story that, oh, it's not yam season yet, or it's not the season for orange, or any other crop that you want to mention.
But irrigation
can give you the opportunity to produce, round the cycle. Right now, these are some of the issues. But when you now drive down to the issues around pricing of agricultural produce and the peculiarity of the agricultural sector vis-a-vis the available opportunity for financing them, then you find out that we have a huge problem, because we have the financial sector and some of the players within that sector who don't quite understand the peculiarity of the agricultural sector. So it's either they want to stay clear, or they are giving terms that are not, favorable to the peculiarity of the sector. So the gap you now find is a lot of financing gap for the farmers. Farmers are, they're working so hard, but what we are getting, we're not still scaling up. We're not scaling up because farmers feel the market is not there for them, or they think that the market will underprice them. Again, the issue of pricing comes on board. I'm just picking pockets of issues, because it was a whole lot.
It's a broad-based.
So it's a 2-day training program that was focused on all of the issues around it.
So I want to strongly believe that you must have identified some key financing options and some available valuations that can help an average agriculturist now to, get access to credit.
So absolutely. So one of the things that came out of the session from some of the industry experts we gathered was, first, the financing of the sector, has to be different. Okay. Now, anybody, if a commercial bank, we invited some of the experts within that space. Sterling Bank is very big on agriculture within the commercial banking space. We had experts from there who came, and one of the things that came out of the session is, if you're going to finance the agri sector yourself, you have to become a farmer. You have to think like a farmer. You have to behave like a farmer. You have to get involved, and for some of the banks that have been able to, do this successfully, these are some of the things that, characterize them. They go into the farms beyond just looking at the profile of a farmer or of a company that is trying to access funding to fund agriculture. You have to even understand. So if someone is trying to, do something within the oil palm industry, the credit personnel that want to appraise that project must even understand what is the peculiarity, what's the gestation period between planting and harvesting. And then look at it. If that is the case, for example, for most agricultural produce, there is a waiting period. If you plant, you have to wait to harvest. The minimum you will get is about 3 months, right? And the sort of repayment options that we have within the commercial banking space, for example, cannot support a farmer paying down on the interest of the principal on a monthly basis. So it has to be lump. So if my gestation period will be 1 year and you found that project worthy of financing, then the sort of repayment plan that has to be made should be such that it comes as a bullet. Those are some of the peculiarity and technicalities that are involved.
So we also know, Robert, that the federal government has actually done a lot. I mean, the fiscal authority has been able to put a lot of initiatives in place, coupled with what we've seen massively from the central bank as the monetary authority in this regard. The Anchor Borrowers Program is there. The NIRSAL program is also there available. You've got the Bank of Agriculture as a result of what the fiscal authorities are doing. Will we say all of these is not enough?
Well, we want to sympathize with government, because the government, is trying as much as possible to get this sector started. Because in our view, we are not even scratching the surface, not just yet. But again, one of the things that came out of the sessions we had was every industry expert, and we had experts from even the side of government that were in the room. We all agreed that the growth and the industrial scaling up of agriculture in this country has to be private sector led. Now, think about the funding gap, the investment gap in the agricultural space. It was estimated to trillions of dollars. I was trying to check, the sources that, aggregate so that I can put a figure to it. But let's even assume it's $1 trillion. That is the funding gap. We're talking about 360 or 65 trillion naira of investment gap that we need to fill, for us to be able to scale up our agriculture in Nigeria. Can the government afford to put that kind of money down? No. So we have to agree that the options have to be private sector led. And so we invited people who were, within the private equity side of things, and those who were even using some agri-tech, what you call deploying technology, to solve some of the little issues, pockets of issues that some of the traditional financial institutions
to kind of hedge some of those risks.
Exactly,
that
some of the traditional financial institutions cannot solve. And then we have players within the industry today that are able to identify projects or clusters of projects, no matter how small, because some of the challenges again is that they can't scale up, not just yet, and for them to be able to scale up, they need to keep, understanding the sector, the peculiarity of the risk of the sector, for them to be able to tackle them much more appropriately. But the point I'm trying to make here is that the government cannot do it alone. That's not to say that the Anchor Borers program is not achieving some of the objectives or the intended objectives for it to achieve, but it's like a drop in the ocean. That will not solve it, because what's the size of the fund that's even dedicated within the CBN to get that succeeded. And then when you look at the option of NISA, which tries to partly guarantee some of the risk that is involved, they can't do as much, right? So the option is that we need to get to the level where we now begin to explore some other private sector options. And one of the issues within the space is the pricing of the produce,
which is where the commodities exchange is coming. We seem to have a lot of them now. Exactly. We have the Nigerian government's commodities exchange, and of course there are some other private sector,
which is a private sector initiative. But
so what role will they be playing in
this?
So
the role they're supposed to play is for price discovery, right? Just like you have the Nigerian Stock Exchange, where if you want to buy any security, you can the prices are determined, within the forces of demand and supply playing out within the exchange engine.
But have these ones that are existing been effective enough? We know of AFX rather, and we know of NCX.
Yeah. So again, the effectiveness has not been so much because of commodities exchange the world over will not thrive if you do not have the warehouse, because we're talking about real products. Unlike if you buy 5 units of any security on the exchange, you're not seeing what you're buying. For agricultural produce, it's not the same. So if I demand for 10 metric tons of cocoa, for example, I want delivery, right? So the product itself must be delivered, and it must not just be delivered; it must be delivered with the appropriate quality, that is needed for my input to produce my beverages, for example. Now, so the issue is we don't even have investment for warehousing those products, such that if exchanges are done, so I exchange my 10 metric ton of cocoa for your cash, I must get delivery of that produce. So investment, first of all, has to come within the warehousing space, and I think this is where FX is, trying its bit, because it's private sector initiative. But again, that's what it brings us back to the issue that if we must solve the critical issues of the agricultural sector, we have to go the private area of our economy. But agriculture, much more importantly, because it contributes, very significantly to our gross domestic product. 25% of real product is not a joke, and almost 50% of jobs in Nigeria, it isn't a joke either. So what we think we need to do is for us to solve some of the unemployment issues that we have. Agriculture is a low-hanging fruit for us. And the condition for agricultural exploration is much more favorable to us here in Nigeria.
So in changing these narratives, do you think the commercial banks are already aligning with these findings of yours at this point? Because I know that a lot of farmers have complained as part of the challenges in getting access to credits that You go to the commercial banks, they don't want to make funds available to you. And it boils down to what you also said earlier, that they don't seem to really understand what farming, entails. The major crops that we have in the Nigeria, they don't in the Nigerian market, they don't seem to have a knowledge of the cycle, and so that is one of the key reasons why they don't want to put the money available. So are they really aligning as well with this this conversation?
Again, in all fairness to the banks, there's a limit of the blame game we can put on them. For example, we're talking about commercial banks who are in there to make money, right? Except for few banks, and I mentioned Sterling Bank because they're the biggest, in that space. I think about 10% of their entire loan portfolio is given to agriculture. So they are into it. They are doing a lot of, they are trying to scale up, even in that aspect. And most of the guys writing the credit in Sterling Bank, they are all farmers. Let's just put it that way. So they understand it. But again, the issue we have is in a situation where you have a risk-free rate that gives you a yield of about 16 to 17%, right? And they continue to enjoy it over the years. There's no, incentive for some of the banks to look for, niche opportunities, right? So until we see an environment where the opportunities become so scarce and people have to really work hard to earn the yield, that's when we'll begin to see some of them studying the sector.
Has a key role to play in this
Absolutely.
regard. Equity financing, debts can also be keyed into it. It doesn't have to be limited to private equities.
Absolutely.
Companies.
Absolutely.
Robert Omotude, many thanks for your thoughts being shared here on the program. I appreciate your time.